Good afternoon, friends. This is Prashanjit. I will be taking you through today's lesson session, which is about advanced candlesticks. Okay. In price action, we generally do not follow advanced candlesticks, but having a knowledge about that helps a lot. We can use this candlesticks in many ways. How we are going to use it, we are going to learn today. Okay, so before I take you through the advanced candlesticks, I would request each one of you to go through the disclaimer first. Okay, so let us let us start learning about advanced candlesticks. As I said, we directly do not use advanced candlesticks. It is not part of price action, but it is a part of price action in a way, but we do not use it in price action. How we are going to use candlesticks, we are going to use it in a different way. Okay, so this is what we are going to learn today. So when candlesticks form one after another in the chart, the sequence creates many patterns. Okay, these patterns are repetitive and also have same behavioral aspects. Today we are going to learn these candlestick patterns and their behavioral aspects. Okay, every advanced candlestick pattern can be traded in two ways: conventional way, right? Once this pattern appear on the chart, we can directly jump into a trade. We can get the bias, whether it is a bullish pattern or a bearish pattern, and as per the bias we can directly jump into a trade. Okay, this is somewhat high risk trading, what I believe. Okay, the other way is price action trading. The price action trader uses these patterns to quickly scan all the stocks. There are certain scanners available in the market where you can scan all the advanced candlestick patterns, and if you scan them, what will happen basically, you will get a lot of these patterns, okay, in the charts. So out of 1,000 charts you will get 10-14 scripts where these patterns will appear. So this way you can shorten your search for a trade. Now so what basically we as a price action trader need to do with this advanced, after searching for this advanced candlestick pattern, what we are going to do, we are going to see that the trap zone which we are looking for, sometimes these trap zones are formed with a advanced candlestick pattern. Okay, and if the trap zone is formed with an advanced candlestick pattern, that means if you search it on a software, it will, the advanced candlestick pattern, if we search on in a software, that will help us to identify the trap zones easily. Okay, so another thing, this is one way that the trap zone itself having advanced candlestick pattern, and you can scan for it. The other way is there is a old trap zone, and there price is giving a confirmation by the way that price has created a new, when price arrived, the approach, price created a advanced candlestick pattern on that zone, on that old zone. So this is the two ways we can use the advanced candlestick pattern. We are not going to play it anywhere, everywhere, wherever it is, occurring in the chart. We are going to only play if it is inside a trap zone, right? If the construction of the trap zone have a advanced pattern, then only we are going to trade it, or we are going to trade it if it is appearing on a old trap zone. So that tells us that the price is going to react from that trap zone. So this is what I was saying. If a trap zone structure contains this pattern, then a retracement trade can be very successful on that trap zone. Trap zone, low risk trading. So the first pattern which we are going to talk about is known as doji. It is a bullish or bearish single candle reversal pattern. Understand, this candlestick patterns, they're like single candle reversal pattern. There can be two candle reversal pattern, there can be three candle reversal pattern, and also there are four candle reversal pattern. Okay, so we will learn all of them today. So we'll start with the single patterns. Okay, so doji is a single candle reversal pattern. Okay, so the open is what is a doji? Basically, doji is the open of the candle and the close of the candle is at the same price or almost equal. Okay, so resulting into no real body. This is a indecision candle, and it denotes that there is a lot of indecision in the market. Neither the bulls or the bears are in control. This is a neutral candle, as we have already learned in our past sessions. So these are couple of doji candles which are available on the chart. The first one is a pure doji. This is known as neutral doji. Looks like a cross. Okay. Then we have long-legged doji, right? Again a cross, but a little longer than the previous, range of the doji candle, right? Then we have gravestone doji, right? The gravestone doji, the open and close is at the bottom. Okay, it looks like a very bearish pattern. Then we have dragonfly doji, where the open and close is at the top and we have a wick below. Okay, this is a bullish pattern. And then we have four price doji. Okay, this is sometimes you may see in the chart, looks like a dash with no wicks. Okay, the open and close at the same time, and throughout the day price has remained at the same place. This has no significance, never try to play. Okay, so there are some more doji shapes, like where you may have a little bit of body, a small body. This is known as inverted cross, or maybe a small body at the top side. So this is known as cross, and plus sign, where you have a small, very small body. Okay, so these all are doji candles. So conventional way, that gravestone doji is usually found at a top reversal area. Whenever a gravestone doji forms after a big rally, this denotes price is going to change its trend and go down. Okay. Same way, when price is falling down and suddenly you see a dragonfly doji forming, this denotes a trend change and price will go up. Okay. Same behavior is when price moves up and creates a simple doji. The same behavior is there, that price will change its direction. Same way, when price is falling, if it creates a simple doji, it is also a signal of reversal. Okay. I do not like trading dojis basically. Okay. So as a price action trader, doji based price structures, where you see a price structure with a doji, they are not much reliable for retracement trading. Okay, so such structures should be avoided for trading. I do not like trading dojis on retracement. Understand this very, very clearly. On retracement, I am not going to trade a doji based structure. Okay, but if say after a big rally inside my trap zone, I have a trap zone there. I have a old trap zone there, and price is coming up to it, and suddenly there a gravestone doji forms. What is that proving? That is proving that my trap zone is going to work and I can take a trade. So I am taking a single candle gravestone doji pattern to decide a confirmation entry on this chart. So I am taking a confirmation entry only because a gravestone doji formed in the chart. Okay. So these are known as doji patterns. Lot of doji patterns form. You should always take it with price action or trap zones. Okay. Okay. So the next pattern is spinning tops or bottoms. It is again a bullish. If it forms after a rally, it is a bearish pattern. If it is forms after a fall in price, it is a bullish pattern and single candle reversal pattern again. So this is what spinning top looks like. A big doji type candle, but the body is little bigger than a doji. Okay. The body is little bigger than the doji. Okay. And when it forms, it will form after a big rally in price. And at the top, price will more or less cap off, and then this kind of a candle forms at the top, and this is a reversal signal, and immediately price drops. Okay. So this is known as spinning tops and spinning bottoms. Basically, a neutral candle forms at the end of the trend, hence signals indecision and a trend reversal is expected. Conventionals trade it immediately on the opening of the next candle. So when this candle is formed, the next candle, if it is a bearish, after a rally, a spinning top forms, and after that, if price caps down, or maybe opening here a little lower, or maybe at the same price, then the conventionals, they directly jump into a trade, short trade. Okay. So this is how the conventionals play. The price action, what we will do, we will wait again, we will check where this pattern is forming. Is there a old zone? It can be break limit zone, it can be MIP, it can be any of my trap zones. Okay. And on retracement, here on a rally, price has formed a spinning top. Okay. So if this is this case, then I will take a short trade, or we can wait for opposite engulf to happen. If it is all-time high, the same pattern can form at all-time high as well. Okay. So if it is all-time high, we will wait for a break of authentic, and then we can trade such zones which are having spinning tops. Okay. So these are the two ways retracement trader or price action trader can take a trade. Now Anshul has a question. It means break limit zone forms with doji base. We don't use that break limit zone. See Anshul, there you can use. There is no question on that, but I have seen many doji zones has failed. Okay, so that is there. So this is just a suggestion. Price is very dynamic. It may work or it may not work. Okay. So the next pattern what we are going to learn is known as Maru Bozu. This is a single candle continuation pattern. Okay. Now last two patterns what we have learned, doji and spinning tops, they are single candle reversal pattern. Now we are going to learn something which is a single candle continuation pattern. Okay. So what is a Marubozu candle? Basically these are my Marubozu candle. Generally this type of candles doesn't have wicks or shadows in both sides. Okay. The close is always equal to high or low? In I mean, the close is, when the close is equal to high, then it is a bullish Marubazu. When the close is equal to low, then it is a bearish Marubazu. Okay. So a Marubazu candle can also look like this, a bullish Marubazu. The high, the close will always be happening at the high. I mean, the price will be same. But on the lower side, we may see a small wick. That is also acceptable for a Marubozu candle. The same way for a bearish Marubozu, the close has to happen at the low, but you can have a small wick on the upper side. So in these two structures are both Marubozu candles and they are continuation candles, depicts powerful trend continuation, and next day a gap up happens in price generally. Okay, and price starts, if it is a bullish one, price starts moving up. If it is a bullish bearish one, price starts falling down. So the conventionals, they played it immediately on the next candle opening. So when the next candle opens, they directly jumps into a trade. Price action traders do not trade this way because we do not jump in any trade. We need some zones to take a trade. So yes, Marubazu is a good signal that price is continuing its trend, and if you get some, I mean, good zones thereafter, you can go long because this is a continuation pattern. Okay, this signals the continuation, the trend is going to continue for long, right? So you can wait and wait for a pattern gets formed after this, and once that forms, one trap zone forms, you can enter the trade with confidence. Okay, so any queries on Marubazu? the the candlestick will look exactly the same. Okay, exactly the same. Then there is a hammer. Okay, hammer is a bullish single candle reversal pattern forms after a drop in price. Okay, so price is falling, and then if a pattern like this forms in the chart, this can be red, this can be green as well. Okay, so when this kind of a candlestick forms where you do not have a upper shadow, means upper shadow means upper wick, you only have a lower wick, and the lower wick is at least twice the body. Okay, so what happens basically, after a downtrend, price gaps down and then it creates a hammer candle. This looks like a hammer, right? The candle looks like a hammer, so it is known as hammer. And then next day price probably gaps up, and or maybe at the same point price opens and starts moving up. So the conventionals, they, after looking into this hammer, they immediately jumps in for a trade. Whereas the color can be red or green, anything doesn't matter much. And as I said, the lower shadow is at least 2 times the size of the real body. And price action traders, what we will do, we will wait. I mean, let price, I mean, we have a trap zone, already pre-planned trade is there. Maybe the trap zone is tested. Now price is coming down to the trap zone and you are feeling that a trade can happen from that area. Okay, and suddenly price enters your trap zone and creates a hammer pattern. Once the hammer pattern is created, I mean price closes for the day, you know your zone is going to react, and this acts as a confirmation entry for you, and the next day you are allowed to take a trade on that trap zone, and the trap zone is going to work. Okay, so this is one way of trading a hammer. And if a hammer is there in your structure itself, say you have a trap zone MIP, okay, you have a MIP, and inside the MIP the base candle is a hammer, then one on retracement, what will happen, this MIP will surely give reaction. Okay, this is the power. I mean, retracement trading can also happen in a hammer zone. Okay, so these are the two ways a trade can be executed in a hammer. So hammers do not have upper wicks. So the same way there is something known as hanging man. Okay, this is a bearish pattern. Single candle, reversal pattern again, and forms after a rally. So now look, the previous pattern and this pattern has no difference. It is the same hammer, right? It doesn't have a upper wick, and the lower wick is twice the size of the body. It is the same pattern, okay? Only the name changes. If it forms after a rally, it is called as hanging man, and if it forms after a drop, it is known as hammer. Okay, so this pattern looks the same. The color of the pattern, either it can be green or it can be red. The only difference is, price will be rallying and then it will create a hammer pattern. And this is known as hanging man, and when hanging man forms, price changes its trend. Okay, so what happens basically after a uptrend, price caps up and then creates a hanging man pattern, and then maybe probably a gap down can happen, and the conventionals immediately short at this place and the trend changes basically. Okay, so so lowest shadow is again 2 times the size of the real body. Now Anshul has a very good question. How is the psychology work in uptrend? Basically, many traders fail to understand that many traders make a mistake between a hanging man and a hammer. Okay, when I think after a rally, if this kind of a candlestick forms, if you remember the candlestick session, basic candlestick session, there was some meter I talked about. Okay, there was some meter I talked about. Yes. Now in that meter, what is this candle will be treated as? Is it very bullish, or bearish, or neutral? What will you treat this candle? Very bullish. So if you see a very bullish candle, basically many people make a mistake, right? Many people make a mistake that price is going to go up because there is a very bullish candle formed, and the next day what happens? Price drops and falls down. Okay, so by this a lot of traders get confused. Their expectation, didn't work and they are trapped. Okay, so novices get trapped on this pattern. Okay, so the conventional way of trading it is not good. It's very aggressive. They just jumps in because on times this rather than price falling down, price can again go up, right? That is the biggest challenge with our conventional pattern, my dear friends. That is why we do not use conventional pattern directly. Okay, we use it as a part of price action. Okay, as a confirmation mode, you may say. Okay, so this is a pattern which the conventional, if it forms after a rally, we call it as a hanging man, and they says it is a reversal pattern and price is going to go down. But many a times, many traders get trapped here because this kind of patterns, can change into a bearish pattern can turn into a bullish as well. Who knows? So we will only trade it as a price action trader if it happens inside my old trap zone. Then I will be trading this pattern. Okay, only I will be trading it this pattern as a confirmation. What is confirmation? That there is a trap zone, maybe, right? There is a MIP, old MIP, and price is coming up, and there it creates this hanging man. Okay, I'm going to trade it. Okay, or maybe at all-time highs, price is going to create a hanging man, and then price opens. I will not take a trade there. I will wait for an authentic zone to break, engulf, and then I can trade this hanging man, and this is what I mean here. If a hanging man is there inside your price structure, that is inside your reverse zone, right? That is a good, reliable structure for retracement trading. When price comes up to it, it is going to give you a reaction. Okay. So, so this is the same pattern, almost, I mean, similar to hammer, right? Only thing it's formed after a rally. Next pattern is known as shooting star. It's a very single candle reversal pattern which forms after a rally in price. Now look, there is only a small difference between hammer and this. I mean, sorry, there is a small difference. The difference is there are two differences. One is there is a lower wick, small lower wick, okay, and this is inverted hammer, okay. I mean, if I invert this hammer structure, it will look like this, okay. So this is known as shooting star. It has a small lower wicks. This is a bearish reversal pattern, forms after a rally in price. So this is how it happens. Price is rallying and suddenly you see a shooting star forming. I mean, shooting star are good reversal patterns. I mean, I have seen many times shooting star. It's better than hanging man, and shooting star whenever forms at the top with a small wick low, price generally goes down. Okay. So, in a shooting star, what happens? How the conventional straight? They once the next candle forms after the shooting star. At the opening, they directly shorts the market. Okay, at the opening, they directly shorts the market, and this is how they trade. And this is something we are not going to trade. The other way of trading the shooting star is they wait sometimes. Some of the conventional traders, they wait sometime, they wait for this low of the shooting star to break out. Once the shooting star low is broken, they take the trade immediately, and I mean, the price moves down. Okay, the color of a shooting star doesn't matter. It can be red, it can be green, both are powerful. Okay, so the upper shadow in this case is twice the size of the body. Okay, or maybe a little bigger as well, not an issue. So as a price action trader, how we are going to trade? One, we can trade it as a confirmation entry. How? If price is coming up inside our old zone, and there inside the zone, if it creates a shooting star candle, then we can immediately take that trade, because we know that the price is this particular chart and this particular trap zone is going to work. Now, this is when the trap zone is big or level over level, something like that. We can use this as a confirmation entry, okay? Or we can, I mean, say there is a reverse zone, right, formed with a shooting star. Those shooting star zones, maybe there is a base candle. This is authentic base candle which got engulfed, and this is a shooting star in my reverse zone. I can jolly well trade that on retracement. This is also a way I can trade it. My trap zone structure itself contains a shooting star. These are the two ways of trading the shooting star. Now in conventional, basically the single candlestick patterns, more or less, they are very, very similar. Okay. So at the beginning, many traders found it difficult to remember the patterns one after another. Okay. Jaya Prasad says, sir, could you highlight how shooting star is formed after gap up as in? No, I mean, sometimes there can be a gap up and then the shooting star can form. Okay, sometimes, not always. Okay. So there can be a gap up here between the momentum candle and the shooting star base candle. Okay. So then comes the another. We have learned about the shooting star. Okay. Now we will learn about something called inverted hammer. This is a bullish pattern. Okay. Single reversal pattern, and this looks like inverted. I mean, if I turn the hammer upside down, then you will find a inverted hammer. Inverted hammer, like hammer, is a bullish reversal pattern. Okay, if it forms after a drop in price. So both red and green colors are acceptable. The conventional, they jumps in the trade once the pattern forms, and in the very next pattern, I mean very next candle, they jumps, opening of that candle, they jumps into the trade. Upper shadow of this candle is always twice the body of the real, the body of the candle, or it may be little bit bigger as well. Okay. Price action, again we can trade it two ways. If my, say there is a reverse zone and the reverse zone structure is having an inverted hammer, then I know this reverse zone structure is good, I can trade it. Okay. Another way is, say there is any zone, say there is a break limit zone and price is coming down to it, and inside that zone, once price reaches that zone, inside that zone, price created a inverted hammer. In that case, it may, I mean, act as a confirmation that the price is going to go up. Okay. So this is a inverted hammer, but this inverted hammer confirmation entry is not so true. Okay, it's not so true. I mean, conventional patterns breaks most of the time, so that is why I mean. Okay. So the next pattern what we are going to talk about is a two candle. Okay, it's a two candle bullish pattern. Okay. Uh, so two candle bullish engulfing pattern. Okay, it's a reversal pattern forms after a drop in price. This is how it looks. Okay, so what happens, the first candle has a smaller red body. Okay, then the second candle is a green candle, completely engulfs the body or the range of the first candle. Understand that? Okay, the range of the first candle needs to be engulfed, then we will call it as a bullish engulfing pattern. Okay, can be traded directly or as a retracement to the pattern, or as a confirmation entry or trap zone. Okay, so yes, this looks like an outside bar, but bullish engulfing may look like this as well. Okay, so this one looks like outside bar, but this one is not. Okay, but both are bullish engulfing. Okay, so here there is a gap up is evident, and then the engulfing. So this is the outside bar as well, right? And this is also somewhat outside bar. And but if you check, if you do a lot of, I mean, if you go to Google and search, you will see many bullish engulfing patterns are there. Even little bit of gap up and then move up, also called as bullish engulfing. Okay, so yes, it looks like that, and you can take it as that. So again, bullish engulfing is a very good confirmation pattern. You should always look for a confirmation pattern. And the bullish engulfing, if happens like this, like outside bar, then you know already how to trade it, right? I have already taught you how to trade a bullish engulfing pattern. Okay, if it is a outside bar. Okay. So this is a bullish engulfing pattern. So the base pattern is where there is a gap down. As I said, I love this gap down because it creates the outside bar, okay, in the second day, and then the bullish engulfing happens. This works excellently as a trap zone. So this is a trap zone, okay, for you. So I have taught you that in my session, one of the sessions. Same is bearish engulfing. So what happens? This is again two candle pattern, where first candle is a rally candle. After a lot of up move, then this pattern forms, and second day price creates a red candle and engulfs the real body of the first candle. Okay, the first candle can be a can be a base candle. The second candle has to be a momentum candle. Okay, so this is bearish engulfing pattern, can be traded directly or as a confirmation entry in a trap zone. Okay, so this is a nice pattern to be traded if it appears as a confirmation. The best pattern of a bearish engulfing is where there is a gap up in the second day and then bearish engulf happens. This works excellently as a trap zone, as it happened here. The gap up and then the engulf. So this became a outside bar. In many bullish engulfing, there will be price opening at the same place and then engulfing. I'm not talking about those. Okay. So this is a bearish engulfing, two candle reversal pattern. I don't know, I have missed one candlestick pattern. I don't know where it gone. There is another that is morning star single candlestick pattern. You just Google in Google and you will find it all about morning star as well. I don't know, there was a slide, how it missed. I don't know, I need to check later on. Okay. So same, there is another advanced candlestick pattern which is known as piercing pattern. It is a bullish two momentum candle reversal pattern forms after a drop in price. So this is how it looks. What happens? Day one, price forms a bearish momentum candle, a big bearish momentum candle. Okay. Second day, price gaps down. Okay. Now this is something I call as inside bar. Okay, price gaps down and then forms a bullish momentum candle, and the bullish momentum candle closes above 50% of the range of day one bearish candle. Okay, so by this what I mean, if you take the range of the first candle, bearish red candle, and find out where the 50% of this range is, you mark it, the second day candle should engulf that 50% range of the first candle. Okay, and it should close above. If it does, then this pattern is known as a piercing pattern. The conventionals, they do play it immediately. You can also play it as a, you can also play it as a trap zone player. How you are going to play? I play this. This is this pattern I call inside bar. Now what happens here basically? How to be traded it on retracement? That is what I am teaching right now. This is not written anywhere in the world. You can check anywhere, right? So how to trade it? You know, if you go and back test, you will find whenever this pattern forms, basically the traders, they take the trade on the very next candle for I'll take a long trade. But if you check this particular pattern, you will see after this pattern forms, no, price will come down a little and then moves up. That means there is a retracement happens. So where the retracement happens? Generally the retracement happens at this novice gap. Okay, generally the retracement happens at this novice gap. If you go one time frame lower where this structure is appearing, you will see certainly there is a reverse zone. Okay, and you are going to trade that. Even if you do not have a reverse zone, price will touch it and move up. Okay, something like this. All of you, are you getting this? Little different than what the conventional trades. Okay, the conventional, they jumps in directly. If you check anything, they have their own ways of trading this, but I have found that this area acts superbly when there is a piercing pattern. Okay, so as I said, the best pattern is where there is a gap down. Sometimes there is no gap down. Okay, so that is also there, but that is also a piercing pattern. Okay, so when there is a gap down, it's an excellent trap zone. I mean, it can be traded as a trap zone, and I call it as an inside bar. You have heard about outside bar, so you can relate it to bullish engulfing, and you can relate inside bar with a piercing pattern. The only thing that is that the outside bar and inside bar can be separated from all other bullish or all other bullish engulfing or piercing pattern is that they have a novice gap. Both of them have a novice gap. One engulfs the complete candle, previous candle. Another engulfs 50% of that candle. Okay, this is two different patterns. Remember this. Okay. So similarly, there is another pattern which is known as dark cloud cover. Is a bearish two momentum candle reversal pattern forms after a rally in the price. Okay, so this is how it looks. Okay, now as you can see, dark cloud cover is nothing but it's just opposite to piercing pattern. The piercing pattern forms after a drop, the dark cloud forms after a rally in price. Okay, so after a rally in price, what happens? Price forms a bullish momentum candle first day. Second day, price caps up and then price comes down, then engulfs the 50% of the body of, 15% of the range of the previous day's candle. So when that happens, we know a dark cloud cover formed, and this is very reliable pattern, and price moves down. Okay, the conventional immediately trades it. We as a price action trader can trade it by trading the inside bar, the novice gap. Once price reaches back, you can trade it. Okay, so this is one way, and you can go one time frame lower to find out the reverse zone inside here, and you can jolly well trade this. Okay, this pattern is good. So this pattern can form without a novice gap as well. So remember that. So can be traded directly as a retracement to the pattern or as a confirmation entry on trap zone. So and what I mean by that, if you have a trap zone, right? If you have a old trap zone and there this kind of a pattern forms, you are sure your trap zone is going to work. You can trade this pattern immediately and enjoy this fall. Okay, this is another way of trading all these patterns. I may be little hurrying today because I have so many patterns to cover today, and that is why I'm little taking. I'm little faster. I hope if you have any questions and challenges, you will put it in the message box, and I will surely answer you. Okay, so the next pattern is known as belt hold candlestick pattern. Often signals a reverse in investors' sentiment from bullish to bearish or bearish to bullish. This belt holds can be bullish pattern, can be bearish pattern. Almost looks like a piercing pattern or dark cloud cover. Only difference is the first day we get a base candle in place of a momentum candle. Okay, so if you remember in the last pattern, the dark cloud cover or the piercing pattern, we had a combination of momentum candles, right? Two momentum candles. Here, the combination is of a base and a momentum candle. Okay. Now what happens? There is a bullish, price is moving up, price is in a uptrend. A base green candle forms, next day price gaps up, no upper shadow, price comes down and closes below 50% of the first base candle's body. So the conventionals, they immediately short this pattern, and if it is a bullish pattern, after a fall in price, if this appears, there is a base candle, then there is a gap down, price moves up, closes above 50% of the range of the first candle, then it's a bullish candle. The conventionals immediately jumps in this pattern and takes a trade. Uh, this pattern, I mean, not so reliable. Okay, this pattern is not so reliable and occurs very frequently and basically incorrect in predicting future share moves. Okay, so as you understood that this pattern, you, as a price action trader, you are not allowed to trade. Okay, you need to wait for, I mean, so you need to wait for price to engulf the first base candle at least on the third day, then only you can take a trade. Otherwise, this is a pattern you need to know, because sometimes this may work as well, right? There are probabilities. So for your knowledge, I am putting all these things, because as a price action trader, you need to have knowledge of everything, even indicators, oscillators. You will not trade them, but you need to have the knowledge of them. Because of that, I have kept all these things. Okay, uh, I mean, you need to have knowledge of all these patterns. Not reliable, so this pattern is as piercing or dark cloud cover is. I mean, they are more reliable. The next pattern is again a two candlestick pattern, which is known as harami. Okay, in Japanese, harami is a slang in Indian, but it is in Japanese. It means pregnant lady. Okay, pregnant lady. So the pattern looks like a womb of a lady who is pregnant of couple of months. It looks like that. Okay, so this pattern can be bullish or bearish. Two candle reversal pattern forms after a rally or drop in price. So this is how the pattern looks. What happens basically, after a long rally, price creates a momentum candle. Okay, green momentum candle. Next day, price gaps down inside the body of the first day's candle, and I mean, it remains throughout that day. The second day, it trades inside the range of the first day's candle. Okay, so when this happens, this two candlestick forms side by side. It looks like a lady standing with a, I mean, somebody who was a woman, I mean, who's pregnant, something like that. The Japanese call it. Okay, the harami pattern. Okay, so when this pattern forms, this is a bearish pattern, and the conventional, they do trade it, because this is a good pattern, a reversal pattern. I mean, price do falls after creating this short of patterns, and they immediately trades it on the third candle, opening of the third candle. Okay, so this is a bearish, I mean, sorry, this is a bullish harami pattern, where we have a moment. Yes, who, somebody wants to talk? Hello, anyone, any questions? Okay, so this is a bullish harami pattern where price is dropping. This is a momentum candle. Next day price gaps up, and throughout the day it remains inside the range of the first day's candle. So this is known as a bullish harami pattern. And the bullish harami pattern, the price, which is a bullish signal, and I mean the trend reversal signal, and price moves up. The conventional play two types: one on the opening of the next candle or at the break of this high. So they enter this trade. Yes, Jayaprasad, there is a pro gap. This is a pro gap for sure, and this is not only a pro gap, but also there is a I mean there is a pattern formed which is known as harami. So all these patterns, whatever the two reversal patterns or the three reversal patterns, we will find they are mostly patterns created by pro gaps or novice gaps. Okay, Jayaprasad? Right. So this is how it looks. So also known as this kind of a gap is I mean also known as inside day. I mean this trading is also known as inside day. Okay, so as you can see, I have already written there, also known as inside day with pro gap. So what happens basically, price gaps down, so this is a pro gap, and price remains inside the previous day's range. So this is also known as, some people call it as inside day. So if you ever come to know about inside day, don't get confused. Okay, inside day means harami, just remember that. Some people sell same thing by putting different names. Okay, I have came across all this. I went somewhere and I saw, oh my god, this is so big, they teaches so good conventional demand and supply, and then they say inside day, outside day, what is this? And then I found it is just nothing, it is harami, right? So this is what I mean some people call it. So many there are in this whole world of trading. I have seen, I mean I shouldn't be saying as a teacher, but I have seen many people sell the same thing by putting many other covers. Maybe some people are also selling price action by putting I mean not selling price action, selling something else but putting on the name of price action, so making people confused. Okay, so this is something which happens. I'm sorry for this, but this is something happens. So can be traded directly or on retracement or as a confirmation entry on a trap zone. As I said, all the patterns can be traded as a confirmation entry, or if the trap zone itself is a harami pattern, it can be traded. Okay. Now harami pattern also known as descending hawk or homing pigeon. Okay, when it is known as descending hawk, when the color of the second day's candle is green. I mean when it is a bearish I mean after a rally when red, it is green. This is known as descending hawk. This is also a reversal pattern but little weaker than harami pattern. They remember this. Okay, same way you have homing pigeon. Okay, so it appears after a fall in price. The same way there is a momentum candle and next day's candle I mean it's a small candle and remains inside the range of the previous day's candle, but this is a surely this is a harami pattern, but bullish harami pattern, but the only difference is you have a red second day candle rather than a green candle. Okay, this can act a little bit weaker than this pattern. This is more powerful than this one, but both works. Okay, so the different people again given different names. This is a proof of that, but all are same. You just need to understand the thing. The pattern is same. The names are different. I mean because of the color. All of you clear till now? Any questions? Any challenges? Great. So then there comes tweezers. Tweezers are two momentum candle reversal patterns, both bearish and bullish. Okay. Day one, price creates a momentum candle. Okay. Momentum candle. Second day, price opens flat and engulfs 50% of the range of day one momentum candle, or completely engulfs the day one candle by creating a momentum candle in day two. I mean, both the candles here are momentum candles. So this is how it looks. Okay. So also known as candlestick pivot. If you remember, many times when we were working on MIPs, we have found some MIPs do not have any base candle, if you remember, right? And I used to call it, this is a MIP pivot. Okay. So the same thing, this is known as a pivot. Okay. And what happens here, basically, after a rally in price moves up, creates a momentum candle. Next day it opens flat, and then engulfs the previous day's low. Okay. The same thing here, this is a tweezer top, and what happens next, you will see what happens. Basically a base candle forms and price drops. So here in this area, in a lower time frame, you may find a base candle, I mean a reverse zone, you can trade it. Okay. So same way, this is a tweezer bottom. I have shown you both, where the complete engulf of the body happening, or in this case 50% of the body is engulfed. Okay. So here what happens, price dropping, then it creates a momentum candle. Next day price opens flat and then engulfs 50% or complete body of this candle. Then you know this is a tweezer forms, the tweezer bottom, and price can go up. Okay. Basically after creating tweezer, price generally moves up. This is a reliable pattern. Anshul has a question. In tweezer bottom, close is not above it. That is what I said, Anshul. That is what is written here as well. I think you are not concentrating. So what I said, price opens flat and engulfs 50% of the range of the day one, or completely engulfs the day one. So in this case, I have shown you that complete engulf of day one happens. In this case, I showed you that only 50% of the day is engulfed. So these are examples, right? It can happen. A tweezer top may have a 50% or more engulf, not the complete engulf, or a tweezer bottom can have a complete engulf. So both things can happen. Yes.
I have a question, PG. So basically, whenever this pivot is happening, I have observed that usually, I mean, after these two candles, if there are more candles on the top, then only it is bullish. And if there are more, say doji or some other base candles at the bottom, then it is going short usually.
Great.
So isn't that the case? I mean, after the pivot, the next 2-3 candles will watch. If it is on the top, at the top of this candle where it is closing, if those base candles are forming there, then from there it's a huge long, I mean, like bull.
Yeah.
And
yeah, go ahead.
And then if the candles are at the base of this pivot, like the next candles are forming at the base of this pivot, then it is a huge short. It's a huge fall from there.
Yes.
Isn't that the case?
Yes, it is, right? So see, what I am talking about is completely the conventional part. Okay. Now, we as a trader, we are price action traders, right? We are not tweezer traders. Understand that. We are not conventional. That is why, Jay, the conventional way tells you that, okay, tweezers can be traded immediately. That is the way. But when you observe, this is your observation basically. When you observe, we found no, it is not to be traded immediately. You need to wait for a couple of candles confirmation. then only you can trade. Some traders who are good in candlestick trading, advanced candlestick trading, they do use the methodology what you are using. Okay. The same way, when the candle forms, this tweezer forms, it acts opposite. That is a perfectly correct observation from your side. Okay. Now, as a price action trader, when I use this pattern, okay, a tweezer, you need to have the knowledge of this pattern. I use it in MIPs basically because a teaser generally appears either in a MIP or in a reverse zone. Okay, so in both the cases, just think, in both the cases, what happens after the teaser formation? I mean, price is moving up, comes down, and this is a teaser forms. Okay. So what is this tweezer? Tweezer is basically here MIP, right? This is a MIP. So when the MIP is confirmed, only all these are taken out. Okay, all these resistance are taken out. So to take that out, you need to have couple of candles confirmation, isn't it? Think about that, right? So once the MIP is created, we know this is going to work, right? And that is why I said in a lower time frame we will find a base candle. And another thing, say the same thing I'm drawing again. Just try to understand. I may be not as accurate as the books are. I mean the charts are. Sorry. Just try to understand. Okay. Say there is a resistance. There is another resistance. Price comes down. Another tweezer forms. Here the MIP didn't form, right? Because the resistance is not taken out. What will happen? It will wait, create a base, will go down, right? Because we cannot trade it because it is not an MIP. So as a price action trader, you are much safer on that side. You just know that okay, this is a tweezer in my MIP, I can trade it. Or if it is only a tweezer, like all the conventional patterns, whatever you are going to trade, if they are appearing anywhere in the chart, I am not going to trade it. I know that is that, but I will not trade it. Okay, so it needs to have a confirmation because in this case, it will be some other zone because in a lower time frame, this will be a reverse zone forming here, right? So I will be able to trade it short. So your observation in a way is right, and this is how the price action trader safeguards himself. I mean, by going in your way of the thing. Okay. So Jay, am I able to answer you properly?
Uh, yes.
Okay, thank you. So Muhammad says, PG, one teacher takes 10,000 from me to teach this candlestick pattern. He calls it as candle secret tricks. I don't know, man. I'm so small in this market. And okay, so knowing all everything, only after you know everything, then only you can understand what people are selling to you. I mean, otherwise, it is very difficult. Because all of a time we attracted with the gimmicks, and that is what happens. Can be traded directly or as a confirmation entry. You know when we can trade it directly? When we have an MIP formed or a reverse zone formed. In a reverse zone, how will it form? Say after a fall in price, right? This is the authentic zone. Price falls and suddenly same opening. This is a tweezer, and then price engulfs. We can trade in this pattern. We will go one lower time frame and we can trade it. Okay. So this is how the tweezers are played. In fact, all the patterns are to be traded with trap zones. Without trap zones, nothing is going to be traded. Okay. It's as simple as that. Either we will take a confirmation on the trap zone or the trap zone itself will be created with all these patterns. Only these two. Okay. So if a trap zone have a tweezer below, then stop loss should always be kept below the previous low or the high, whatever it may be, right? So what I mean by that, sometimes I have seen something like this happening. Okay? Uh, Say, I mean, I mean, think that this is a reverse zone. This is a tweezer form. After the tweezer, you have a base candle. This is the source of engulf. Price probably engulfed authentic zone right here. Okay, price engulfed the authentic zone. This is the source of engulf, and you are sure that this can be traded. Believe me, what will happen with you? You will, if you put your stop loss here, no, price will come down, hit your stop loss, and then this is what happens with any of the pivots. Check it, go back and check it. Okay, so for pivots, you have a source of income. It's okay. You need to enter at the source of income, because otherwise price may go up from the source of income and you may miss the trade. So the only thing you are going to do is cover the low, or if it is a supply, then cover the high of the pivot. I mean, you need to cover the pivot. Otherwise, you will be stuck. Okay. So friends, any challenges? Any further challenges in it? Can I move forward? I know I'm going so fast today. Usually I'm very slow. Okay. Okay. So yeah, now I got morning star. I don't know, something happened. Okay. Okay. So morning star is a bullish 3 candle reversal. I'm sorry, I said one can, single can. I sometimes myself get confused. Huh? So after a drop in price, it forms. Okay, how it forms? Basically, after a drop in price, the first candle is a drop in price, bearish candle. Second candle, price generally gaps down a little and then creates this, if you remember, shooting star, right? It just looks like that, but it is known as morning star. Okay, and once the morning star forms, then the next thing is we'll look for the third day candle. It's a green candle, and that needs to close above the 50% of the range of the first day's candle. And this tells us that this is a reversal pattern and price can move up. Again, like all conventional patterns, this can be. Okay, so can be traded directly. If you want, you can trade it directly. I mean, if it creates a reverse zone somewhere here and this is a part of the reverse zone, you can trade it. Or if there is a old good zone here, right, and this pattern is forming in the approach, then you know that I am going to trade this. I'm not going to leave it, because this is a confirmation that price will go up. Okay, so this is how you can trade it. Okay, so this is known as morning star. Same way we have something called evening star. Okay, evening star is bearish and it forms, uh, the reversal pattern forms after a rally in price. Okay, something similar, right? Now, how it looks? It looks almost like a spinning top, but the upper shadow is little bigger than the lower shadow. Okay, so what happens here? Day one again, or it may be a shooting star sort of candle, inverse shooting star. Okay, so what happens? Price rallies, there is a momentum candle forms. Next day, this base candle forms a small body, either color. I mean, it can be green, it can be red, not an issue. Okay, and then price gaps down. There will be a gap up and gap down. Okay, and then price will come down, another momentum candle on day 3, and the day 3 candle will engulf the 50% of the first day's candle. Okay, when that happens, we know this is a evening star form. Okay, and if this evening star is inside my trap zone, I know this trap zone is going to work. Or say I have a old trap zone and there price is coming down in the approach, this pattern forms. I know this trap zone is going to give me a good reaction and I can trade it. Okay, so this is known as uh, evening star reversal pattern. Okay, and by the by, all these patterns, you can scan it in different softwares. Okay, so that you can do. You can scan it in different software. So this helps you to reduce your scanning part. I mean, looking for trends. Okay. Okay. So next is something known as abundant baby top and bottom. Okay. This is our similar pattern like morning star or evening star. Abundant baby top is a 3 candle bearish reversal pattern, and abundant baby bottom is a 3 candle bullish reversal pattern. So this is how the pattern looks. The only difference is that the base candle is separated from the move in and move out candle, momentum candles with gap in either side. You may also call this as a island reversal pattern. If you remember, I have discussed about island reversal pattern in one of my sessions, advanced gap, right? So what happens basically in this pattern, price rallies a lot and then a momentum candle gets created. Okay, then price gaps up completely, creates a base and gaps down next day and drops down. If you check, the base candle and the move in candle and the move out candle are not touching each other. Hence, the gap can be seen in both sides. These candles are not touching the base candles, okay, the upper wicks of the move in and the move out candles. So this is known as a abundant baby, and abundant baby can be traded as a confirmation entry as well as, I mean, very recently one of my students, he showed me from PG's masterclass 1 that there was a abundant baby and that was really working well, right? It was a confirmation entry and there abundant baby formed. Okay, or who is it who showed me that? I forgot his name. I mean, somebody was there who showed me that trade, right? So it worked beautifully. There was a abundant baby. So this can be traded as a confirmation, or if it is inside the trap zone, it can be traded. Same way, after a drop in price, if a momentum candle forms, thereafter a base candle with a gap down, and next day another gap up, and a rally candle forms. This is known as abundant baby bottom candle, and as you can see, the gap will always be evident. It will not be closed from either side. So this is a abundant baby. Okay, so this is a good reversal pattern. Another reversal pattern. Now we are talking about 3 reversal patterns. We have come up from first 1 reversal pattern to 2 reversal patterns. Now we are talking about 3 reversal patterns. Richter says, what is the difference between abundant baby and morning star? Just a second, I am showing you the pictures. Look at this, the gap is evident. What you see, the gap is not evident. The wick of this candle is touching the base, even this candle, okay? I am taking you to the, here as well. Can you see the wicks, the bodies are touching each other? The wicks are touching each other, there is no gap here. In both these sides, one side there is gap which is available, which is open, another side the gap is closed. So that is the difference, Victor. Are you getting the point? Are you clear? Are you clear? Okay, here you can see both sides the gap is visible. It is not closed. The wicks have not touched the bottom of this wick, right? So it is not closed, right? The low is not touched by the upper wick of this candles. Okay, so this is the difference. So the 3 upside, inside up, I mean this is known as 3 inside up candlestick pattern, bullish reversal. I mean, which is composed of a harami pattern and a confirming third candle it focused a sudden shift in trend. Okay, so what it basically is, see, these are the same patterns we discussed previously. In two pattern we have harami, right? If you now extend one more candle to it, right? If you add, this is a harami pattern, these two, after a rally this is forming. There is a momentum candle and then there is a pro gap and a red candle formed, which is inside the range of this candle, okay, first day candle. Now, after that, if another red candle, momentum candle forms and that breaks the low of the first day's candle, I mean, there can be a gap up as well, and then it breaks the low of the first day's candle, then another pattern forms, which is known as three inside up candlestick pattern. Okay, so when this forms, we know that sorry, this is the three inside up. After a downtrend, the drop in price happens. There is after a harami pattern forms, and then we have the engulf of the first day's high. So when that happens, we call it as three inside up pattern, and this is a bullish reversal pattern. If it forms inside our zone, we are going to take the trade. No, there is no outside bar here. Okay, there is no outside bar in this chart. Anshul, outside bars are with no vice gap. Here we have pro gap. So the see inside down is similar, rally, then pro gap, then red candle, which is inside the body of the first day's candle, and the third candle is a confirmation candle which engulfs the first day's candle. So once that happens, the conventional trades it. So this is known as three inside down candlestick pattern, and it's a bearish reversal pattern. I mean, where we have a harami with a confirmation candle, third confirmation candle. Okay, forecast a sudden shift in trend. I mean, better than trading a harami, one trades this pattern. Okay, three inside down. Okay, like all conventional patterns, my dear friend, this also can break. So always trade this with trap zones, with price action. Without price action, if it appears anywhere, everywhere, you are not going to take it after it. Okay. So the third candle should engulf the first candle high in the case of three inside down. So this is how we can trade it immediately on the retracement, or can be used as a confirmation entry on a trap zone. So the same way we are going to trade it. There is no change of the way we are going to trade it. Okay, as a price action trader. Then comes another very nice pattern, which is known as three white soldiers and three black crows. Here this is three momentum candlestick pattern. Okay, so the pattern looks like this. Okay, forms at the end of the trend, depicts trend reversal. Okay, so how it happens? After a big fall in trade, suddenly we'll see three momentum bullish candles forming. And how will they form? This will be a momentum candle, then there will be a small pro gap, the pro gap will fail and price will move up, another momentum candle will form, and then another pro gap will happen, the pro gap will fail and another momentum candle will form. Okay, so these three candles side by side forming with a failed pro gaps is known as three white soldiers. Strong, after a strong downtrend means a bullish reversal. So price will retrace back little and move up. Same way, three black crows after a strong uptrend, if price suddenly creates one red momentum candle, then a pro gap which fails, another momentum candle, then pro gap that fails. This is a strong reversal pattern. Price will move up little and then drops. Okay, so this is one of the examples, right? And what happens after a big fall in price? Suddenly you see one momentum candle, then a pro gap which failed, then another momentum candle, then there is a pro gap which failed and price moved up, then a small retracement back and a big real rally. Okay, so the same thing here. After a big rally, suddenly what price did? One momentum candle, then there is a pro gap, failed, another momentum candle, there is a pro gap, failed. So three momentum candle formed in a sequence. So this is known as three black crows, and we know a small retracement will happen, which is this green candle, and then immediately price falls. So this is a good reversal pattern. You can trade it if it forms in your trap zone. Okay. So whenever it forms, price often retraces back to a little and then a new trend starts. As you can see, a little retracement will always happen. I mean, always happen. Okay. Price action trader plays the hidden zone inside this pattern on retracement. What happens basically? What I mean by this, you will see some kind of a MIP or some pattern here, right? I mean, the pattern is like this. Price will, I mean, when this pattern forms, price will certainly engulf some of your important zone, trap zone, and that will act as a hidden zone, and you can trade on the hidden zone. Okay. I hope all of you understood that. Same way, as you can see, this is might be a zone, and price retrace back and move down. Okay. So hidden zones work beautifully with three white soldiers and three black crows. Any questions? Any challenges? You may find all the information in the Google, but something additional is there. Clearly, Anshul, it is mentioned that it forms in a trend and not accumulation distribution. It forms after a downtrend, a big downtrend. It forms after a big uptrend and not a sideways range. Anywhere it is written that it is formed on a sideways range. Accumulation distributions are a sideways range. Okay. So this is one thing you need to understand. So the next pattern is known as concealing baby swallow. This is now, till now I have talked about one reversal pattern, two reversal pattern, three reversal candlestick pattern. Now I am talking about four reversal candlestick pattern. I mean four candlestick to show us that there is some reversal is going to happen in the price. One is bullish and another is bearish reversal. Okay. So this is known as concealing baby swallow pattern. What happens? Forms at the end of a trend depicts trend reversal. First and second candle is a momentum candle. As you can see, price is dropping and then price creates a momentum candle followed by a small gap up and another momentum candle. I mean pro gap and failed, another momentum candle. Then price creates, I mean, thereafter price gaps down. As you can see, there is a small gap down happens. Okay. This is gap up, this is gap down. Okay. Followed by a base candle. A base candle forms. Which kind of a base candle is this? If you remember, this is inverted hammer. Right. Now, after the inverted hammer, what happens? The last candle, the fourth candle, again, pro gap happens. Opposite to the trend, a gap happens which is opposite to the trend. Here the trend is down, so a gap is happening opposite to the trend, but it fails. Again the pro gap fails, and what happens? It actually engulfs the base candle again, okay, and closes below. Now when this happens, understand the logic behind. What happens with the novices? What they think? All candles color, all the four candles color is same in color. I mean, they are all red or all green. So what happens when you see prices dropping, a base candle forms, and then there is something like a very engulf happened. I mean, with price gapped up but failed, and an engulf happened. Price drops back. So what do you think? What happens with the I mean, I want to know the psychology of the novices. What will they think? The low of this base candle is broken. It is closed below. What will the novices do if they see this kind of a situation? Every pattern has its own psychology. You need to read it, right? So the market participants mostly they will think that the price is going to go down. This is known as still concealing baby swallow pattern. And what happens? This is a bullish pattern basically. Okay, so this one is a bullish pattern here. The red ones is a bullish pattern basically. And what happens? Next candle you will see another pro gap happens and price will move up. Okay, and this is wonderful pattern for a price action player because you can play it as a confirmation entry. Okay, so you can play it as a confirmation entry, my dear friends. So this pattern you are not going to look at in the trap zone, but it is used as a confirmation entry. One of my trade which I have, something like this, similar to consoling baby swallow. There is something not consoling baby swallow, but similar thing which I have identified is a reversal pattern, candlestick pattern is there in one of my posts which I posted in Bank of India or I think it's Bank of India, right? So if you check that trade, almost similar to baby consoling, and that is a pattern when forms. I mean, many times the pro gaps are failing at a trap zone means it wants to go up. Okay, so this is a different psychological game they play. Okay, same way after a rally, you see first red candle form, momentum, a pro gap, failed, another momentum candle, a novice gap, then a base candle forms, and then another pro gap happens, but the pro gap fails and price moves up, breaks the high and closes here. So this is a reversal pattern. But mind this, don't play this anywhere and everywhere in the chart, only if it appears inside a trap zone. I mean, if there is a old trap zone and inside that this pattern is appears, believe me, your trap zone is going to work. Okay, it is going to give me good amount of money. So this is one what you can use. This is 4 candlestick pattern. So almost by this I think I have covered all kinds of advanced candlestick patterns. If I miss something, I will forward you. I don't know. So that's it for the day, friends. And that brings me to the end of today's session. Go back to your charts and find out these patterns. Do play it for scanning purpose and do play it for confirmation purpose. Don't play them directly. Okay. So this is my suggestion. Share your work with your mentor. Not everyone is practicing. I'm sorry if you do not practice, you may not reach the success you want from price action. Okay, you need to do some analysis. So please do send your feedback to info@prosenjit.com. I would request, as we have completed most of the advanced topics, we are only left off with risk management and putting it all together, which we'll do I think by Thursday we will cover all the topics. This week we have 2 more sessions. They are aligned on Tuesday and Thursday probably, and so be there, and I expect all of you to please go to my Facebook page and give me a rating and a review from your side, whatever it may be honest. I do not mind if you give me 1 rating, okay, but be honest on that. If you find it good, if you find my what I am teaching is good for you, and if you find it, you can give me a better rating. You are always welcome. But please do go to my Facebook page and give me a rating and review. So, at this stage, you can always you can always do that. Okay. So I'm sure scanning part I will show you in live session. Okay. I will not show you here because it is not so important as price action is. Okay. So it is only when we are taking confirmation entry, then only this will require. So remember the patterns here. There is nothing much. It is only you need to remember the patterns. Okay, you just have to go through all the patterns and remember it, because when it appears in your zone, then you need to remember back that what you have learned. So that is more important. Go through the patterns and remember it. Right? So when it appears, you can take a trade. There are n number of examples. Every day it happens. Okay. So today I'm not going to take you to these charts because it is not important for this particular confirmation entry. It is very easy for you to find out. Okay. So that's it for the day. Thank you. Bye bye. See you then.
Got it.